But until the system is more sound, is more stable, is more honest, I'm forced to own gold. If you inflation adjust $50 silver from 1980 to today, that'd be over $203 an ounce. Both of the dealers I spoke to, which are large dealers in the US, say there are more buyers coming in. There's new people coming in. All these companies are investing in this brand new startup. It's a brand new company.
Okay, ladies and gentlemen. So today we have Jeff Clark back on the show. And today we will talk about the US economy, precious metals, of course, commodities, stock picks, and many other very interesting topics. So, Jeff, thank you so much for being here.
Oh, it's great to be back with you, Vlad. Boy, we got a lot to talk about, huh?
Yes, definitely, Jeff, definitely. So, I would like to start with the big picture first. So, what is your take on what's happening with the US economy right now, and what would be some of the things that you are paying attention to?
Well, let's just say I'm glad I own gold. That's the main thing for the big picture, because the monetary system is still suspect, it's unstable, it's vulnerable, deaths and deficits. We have geopolitical concerns, we have financial concerns, we have market concerns. I mean, the list goes on, right? We could have a recession, there could be a stock market crash, or even just a bear market, which would freak out many people on the mainstream, right? So there's a lot of things going on, and any one of those could be a catalyst for gold pushing into the next leg higher. So that's the big picture in the short term. I think there's two things to note right now about the short term, Vlad, and that is number one, we've obviously had a pullback, and I think we're going to range trade here for a little bit. It wouldn't be surprising if gold consolidates, a little bit along with the other metals, especially silver and the mining stocks. The second thing is, uh, the volatility is really ratcheted up. So it's much more volatile, but that can be to our advantage, right? If you're looking to get into the market, ride the wave, buy the dip. That's our mantra. And so we've ridden the wave, and now there are dip opportunities coming up here. Gold may not have its next leg up till next year. I don't know, but what I do know is that any, short-term pullback or decline or sudden sell-off like we've seen here the past few days, those are windows if you don't have a stock you want or you don't own enough gold yet.
Yes, and just to stay a little bit more on the economy, with the recent economic data, Jeff, do you see a clear signs of a slowdown?
Yeah. Well, that CPI just came out today and it was close to what was expected, but it's still at 3%. That's still above the Fed's 2% target, right? So they may still try to fight it, but I think there is a slow slowdown, if I could say that, in the economy. I'm not an economist, Vlad, so I don't watch every little indicator and tick in the economy and what's happening. Um, but is it slowing down? Sure, yeah. And I think it's very vulnerable to slow down even more. So it wouldn't surprise me in the least if we had a recession in 2026. And of course, that's good for gold. Gold usually has risen historically during recessionary periods. So I think the economy is something to watch, but I don't think it's something to worry about. If you own enough gold, then you shouldn't have to worry too much about it.
That's a good point, Jeff. So with gold, it's very volatile right now. Before, the $300 move would be phenomenal, let's say 2 years ago. But
Yeah.
right now, that's something that we see. And at the current valuations, Jeff, so at around 4,000, with all the factors that brought gold to these levels still being here, how do you evaluate the current situation in the gold market?
Well, that's a good question. What market participants do with prices is one thing, and what's happening in the economy and everywhere else is a different thing. So you'd think, oh, all these factors should be driving gold higher. Well, it had a pretty hot run there. It's not surprising that there's profit taking out there. Trump is trying to work with Z in China, so there's other things that have caused it to slow down. The dollar's getting stronger, so it's not too surprising that it's slowed down a little bit. So looking at those two things separately, you have to answer those things differently. But I think that, in my opinion, I think gold's going to consolidate here, and it's going to build, more and more strength for the next leg up. What we don't know is what that catalyst is going to be, but we can be pretty darn sure there's another one coming.
Yes. And Jeff, so what, if we could mention some of the factors that you believe are pushing gold and why you believe that over the long term, it should continue to push upwards?
Well, like I mentioned, there's a lot of factors pushing on it right now, and even more importantly, there's a lot of factors still out there that either haven't played out yet or haven't even come into the picture yet. So there's just too many systemic vulnerabilities and risks that force us to own gold. So, whether it be something in the economy, with the markets, with the debts and deficits, whether it's geopolitical, where it's, political in the US, you know, there's so many factors out there. Honestly, it would be hard to track all of them. And get this, Vlad, I went back and looked at all the crises over the past 50 years, and almost half of them were black swans. Nobody was expecting them, COVID being an obvious example of that. So, gold sold off during the initial COVID crash, and then it rebounded dramatically, before that year was even over. So, I think that just points to, no matter what's coming, I mean, can you think of a period in history that would be more important to own gold than right now? I can't, you got to own a meaningful amount of gold, whatever that means to you.
And Jeff, would you agree with the statement that retail investors in the West are still not that much involved with gold? So if we look at the the buyers, it's mainly central banks. Maybe it's like the top 1%, the money managers there getting involved a little bit. But if we talk about the retail investors, so for example, I personally don't hear anyone talking about gold around me. So that'd be one of the things.
I've talked to a couple bullion dealers, and they say there are definitely sales going on right now. People that have been, pardon me, that have been in the industry for, years and years wanting to sell some of their metal. But there's also buyers. Both of the dealers I spoke to, which are large dealers in the US, say there are more buyers coming in. There's new people coming in, and that happens every time there's a big spike in the gold or silver price. So the West probably isn't. Um, Many of us in the industry have owned gold and silver for a long time, right? It's the new people coming in that are kind of balancing any sales out. But the West sort of lags other countries in terms of, owning physical gold, at least in my observation. So, when the next leg rises, there will be more people selling, but there'll probably be even more buyers than there are now.
Right. And would that be a good thing, Jeff, for the bull market? Because we can look at it from different perspectives. Yes, it's a good thing that we have new buyers, but on the other side, if we do see these people who would not previously be involved with gold buying right now, maybe this is the end?
That's a good question. The answer is twofold. With gold, it's not going to really impact it. The gold market is huge. It's very deep. It's very liquid. There are literally billions of people that probably own gold and can buy and sell. So a little bit more volume or a little less volume really isn't going to impact the price, especially when you're looking at retail investors. However, when it comes to silver, that's not the case. The retail investor does drive, I should say, investment interest does drive the silver price because industrial demand kind of remains the same and is ticking up. Jewelry demand, religious artifacts, etc., silverware, all those things don't really fluctuate that much. The one thing that fluctuates a lot and therefore drives the silver price up or down is investment demand. So as investment demand goes up for silver, that will directly impact the price of silver and drive it higher. If investors sell off silver, and not just retail investors, and investors in general, including institutions, fund managers, but if they sell it off, then the price is going to drop. So that's the big difference between gold and silver when it comes to investment demand.
Yes, and Jeff, what would need to happen for you to sell your gold?
uh, the answer for me is pretty simple, and an honest, stable monetary system. We don't really have that right now. We're in a fiat system. We're fiat, every currency in the world is fiat right now for the first time in history. Now, it's been that way for how many years or decades now? But until the system is more sound, is more stable, is more honest, I'm forced to own gold. If we got a more stable, honest system that was backed by something where spending wasn't literally $1 trillion extra than the revenue the governments are bringing in, then I've got to own gold until that happens. Maybe we do get a partially gold back system. We've had that before. I have no idea if Trump will do that or any politician, but I know that many Fed governors and many in the mainstream would fight that. But it's going to take something like that to where the dollar in my wallet is not losing value every week almost, we're going to have that. The dollar should be strong, not weak and fluctuating as much as it is. So until that happens, I'm forced to own gold.
Yes, and I definitely don't see the governments wanting to have the currency backed up because they can use it as a tool to buy wars pretty much, to make promises. With gold, you can't really do that because then you get that caps and out.
Exactly. That's exactly right. Yeah.
Just a very quick break, guys. So I've spent the last 12 months creating this course, Wealth Building Blueprint. I've put an unbelievable amount of effort into it. I cover investing, trading, speculating, business. The course is perfect for people who are still relatively new to this wealth building process. And I also offer 3 days money back guarantee. No questions asked. If there's absolutely anything that you're not happy with, you will get your money back. There's also a private community where you can ask me any questions, you can talk between each other, you can share news and things like that. The link will be in the description. Right now the course is at a 70% discount, and let's continue with the video. And so Jeff, on silver, a little bit. So I was actually talking with Keith Neumeyer the other day, and he was saying
Uh,
that in his mint, the first Majestic Silver, they had a record month in September as well. So that's very interesting. But at the current price, so we know that gold is at all-time high, but silver just reached the price that it reached before in 1980s. So
right.
how are you viewing the silver market at the current price?
So you're right. Gold surpassed its all-time high, setting new all-time highs. It set over 40 new all-time highs, historic highs this year. Silver's not, did it exceeded 50 there for a couple days, I think it was. But it's not been inflation adjusted. If you inflation adjust $50 silver from 1980 to today, that'd be over $203 an ounce. And that's using the CPI, or as some call the CPI. um, so, it seems like if you're really going to be honest and value silver what it's really worth on an inflationary basis, it would have to be triple digits. Now, I'm not saying that's going to happen. I know Keith thinks that's is convinced that's going to happen, and hey, there's a very good chance it does. But the point is that silver is clearly, as I think many in your audience know, is definitely undervalued relative to the gold price. So while there's still upside in the gold price, there's probably more upside in the silver price.
And those fundamentals since the 1980s only got much stronger. The demand is increasing with solar panels and things
Yeah,
like that.
some people claim that it was the Hunt brothers, and the Hunt brothers contributed to the rise in silver. But there have been studies done that said that the Hunt brothers and them trying to corner the silver market, which they didn't really necessarily try to do, if you dive into it, but they contributed about $1 in the silver price. Their efforts contributed about $1 in the rise. So, that you can debate that. But my question to those people is, well, what if we have another, Hunt brothers today? What if we have five more Hunt brothers today? The same thing that happened then can happen today, and that of course would drive the price higher as well. So I don't put a lot of stock into the fact that, oh, it was just the Hunt brothers. I don't think that's correct. So I do think that a $50 inflation adjusting today for a $50 price then is, let's say, not an inaccurate way to look at it. So silver's going higher.
And so, with the current risk to reward between gold and silver, so would it be wise then to maybe start rotating your gold and into silver, at least somewhat?
I know, some people are doing that because the value still is with silver, the deeper value. Just look at the gold silver ratio historically since the 1970s. The average is 55. If you go all the way back to the 60s, the average is 50. It was 35 in 2011. It was 20 in 1980. And look where we are today in the 80s, almost 90 again. So, the gold real silver ratio is going to fall, and it's probably going to be because silver outperforms or rises more than gold. So the ratio can fall if it, underperforms gold on the downside, but it's more likely that, over the next 2, 3, 4, 5 years, whatever it is, that silver outperforms gold, gains more than gold, and therefore the ratio falls. So there's definitely value there. I wouldn't, I wouldn't sell all my gold. I wouldn't want to be without it. It's the king of metals for a reason, And if we go onto a some kind of metallic standard, it'll probably be gold first and not silver. I could be wrong, but I think you definitely want to hold on to some gold, especially the gold mining stocks too.
Yes, and it's probably also wise to have some cash on the side if we look at the economic situation. Usually, silver does not perform that great, at least at the start of the recession.
That's right. Yeah. Gold leads, silver lags. We've seen that. Silver's just now started to outperform gold prior to this pullback here. So I think that'll happen again. Gold may be the first out of the gate, but silver will catch up and pass it in terms of a percentage return. So I think that's what we're looking at. Again, maybe not in the near term, but definitely over the medium to long term.
Yes, so I think, Jeff, it's time to move to the fun stuff, mining stocks. So um, if we look, so I'm very much involved with that sector, and if you do some of the analysis on the big companies, let's say Newmont, Pan American, the Agnicos, they're doing unbelievably well from the business perspective, from the cash flow. They feel really, really comfortable. So, but with that being said, the price uh, did increase uh, as well. So at the current commodity price, Jeff, do you still see a lot of opportunities with these big producers as well?
Yeah, that it's just a matter of interest. My interest doesn't really lie there. I'm going for, home runs and grand slams and not, bunts or singles. So, which is what you get with a producer. But if you want to own a producer, in my mind, there's clearly one that stands, head and shoulders above all the others, and that would be Agnico Eagle. They have just a very good reputation in the industry. Even other mining companies admire them and say positive things about them. So that's where I would look first if I was wanting to own a producer. But the thing with producers right now, of course, the big headline is they are just printing cash right now. Their margins are so high. Inflation went up, but the gold price went up higher. Inflation's kind of stabilized and the gold price kept going higher. So the margins on these guys are just they've been, never been this high in history. The percent margin has never been this high in history for gold producers. And that's assuming your costs are under control and you're not above the industry average. But they really are printing cash right now, and that has major implications, not only for their values and their stock prices and their cash levels and paying dividends, but also for the industry at large because that will increase M&A. They're sitting on hordes of cash, and that's going to allow them to go out and start buying assets more aggressively. A lot of us a year ago, even just a year ago, were wondering why aren't the majors going out and buying these stupid cheap stocks? They could buy 10 for what they could get, one for 5 years ago. Well, one reason was because their cash levels were good, but they were kind of, stable. They were flat. Now they've jumped up huge. Their debt levels are also lower on a net basis. So you have a perfect storm for an M&A cycle to just really pick up steam. And of course, those of us who invest in juniors are going to get rewarded from that activity.
Yes, I was talking with Rick Rule recently as well, Jeff. So he was doing some analysis of Agnico Eagle before the stock pretty much doubled and after. And he actually believes that right now, after the price doubled, the stock is actually more attractive than it was because of
Right.
how well gold done.
Right, because gold has made it more valuable. They're spitting out more cash. They can do more with it. So yeah, even though the stock price may have went up, the gold price has went up so much that it's made them still undervalued. So that's I agree with that observation. Absolutely.
Yes, and Jeff, so usually during bull markets, money sort of trickles down from the big companies towards the juniors. And you did mention that you believe that the M&A activity should increase. So do you think now the most opportune, like if you are competent at analyzing junior stocks, that's where you can find real value in the sector?
You can find value in producers. What I mean with the M&A cycle and with juniors is that you'll have more strikeouts, but you're going to hit more home runs than you would with a producer. If a producer makes a discovery in one of their side assets or deposits, that's not going to do a whole lot with the stock price. The Barrick asset in Nevada, notwithstanding. But usually you're not going to get a big bang. Where you are going to get a big bang when a discovery is made is when a junior makes a genuine discovery on, their property, whether it's brownfields or greenfields. So that's where you're going to get probably a bigger bang for your buck.
Mhm. And I know, Jeff, that you have a list of some of the stocks that you would be interested in at uh, the current commodity prices.
Yes, we've been talking a lot about, strategy right now, and instead of trying to predict, just strategize, be prepared for whatever the case, the near term might be. Despite our strong belief in the big picture, we think there's things that people can be strategizing right now for the near term. And in our paid letter, Paydirt Prospector, named after the book, we just did a big issue yesterday, on the companies that we would look to buy right now that haven't run away from us, right? So you have stocks that have not just doubled, but have gone up 3, 4, 500%. You may not want to chase those, but here's some stocks over here that are also high quality that they're moving up, but they haven't quite left the station yet, so to speak. So those are good targets. So that's where we've been trying to focus recently.
Mhm. And could we talk about some of those undervalued stocks that you're looking at, Jeff?
Absolutely, that's my favorite topic, Vlad. So so I think your audience may know we have free letters and we have paid letters, subscription letters. So on our free site, you can read for free our full analysis, just like it's a regular paid newsletter, and it goes over our portfolio. We have Gold Advisor and Silver Advisor, and we own all the stocks. They can't be invited, and we get asked a lot, but they can't get on the site or be invited to be a sponsor. Unless we would own it. Um, so, we've talked about gold. We didn't talk about copper, uranium, but I mean, if you want a gold pick, you know what, on the free site, you can read all about it. But man, Heliostar Metals just is the gift that keeps on giving. That stock has just really been running hot for over a year now. I mean, I think we're up like 500+% on the stock. But here's the thing. It's not done running. It's not done running. They're a small producer right now, but they have multiple other mines that are going to be coming online and growing, and they're going to be, anywhere from a 200 to 250,000 ounce annual producer here in a couple years, and they're not even 100 now. So the growth there is tremendous. Now, some of that move in the stock price is investors looking forward, right? But they haven't got there yet, and they won't even be done growing then. So I really like this management team. And by the way, they're in Mexico. And while everybody was wringing their hands about Mexico, and some analysts were warning, get out of Mexico, we were booking doubles and triples. The same thing with Luca Mining. So I think the Mexico risk is overblown, as these stock prices would reflect. But Heliostar Metals is one you might want to look at despite it running up a lot, because they have a long way to go and a lot of big growth that is dead ahead for them. So there's one, and again, you can just log into the Gold Advisor and read all about that one on the portfolio page. If you want a silver one, I'll give you one from our paid letter, Paydirt Prospector, the subscription letter, that I really like. There's several in there that I own, but the one that you could look at right now would be Pacifica Silver. This is run by someone I know very well in the industry, and I trust him. They have put together quite a team. They have an asset down in Mexico that is totally a brownfields project. If you have the book Paydirt, read the section on the board game Battleship. That's exactly what this company is doing. Um, they're drilling right now. They have drill results pending. Now we're here at the end, near the end of October. I think the first assays aren't out till maybe end November, early December. It depends, right? You have to wait on the lab. So they're a month away. So you'd want to be in before then. And get this, First Majestic Silver has invested in Pacifica Silver. So has Silvercorp Metals. So has Eric Sprott. So has Vizsla Silver. All these companies are investing in this brand new startup. It's a brand new company, just started this year. So that's one you might want to take a look at. To read it, you would have to subscribe. We've got 20 picks in there right now. So, but that's a good silver one I like. And again, you'd probably want to get in, sooner rather than later on that one.
Thank you so much for that, Jeff. And do you would you be still interested in copper junior companies?
Oh, absolutely. Yeah, copper and uranium. very real supply demand issues there. You have political support, you have new regulatory support for both of them. So those are definitely two metals I'm following, and definitely uh, stocks in pardon me, stocks that I'm investing in those metals. So if you want a couple picks there, so back to our free letter for a copper pick, AMark Resources, which maybe perhaps some of your audience are aware of, they made a big discovery, announced it in January, stocks up like 600%, I think. So it's run up a lot. Now, I still own it, and I have not taken any profits, believe it or not. I'm breaking my own rule. But that's because this thing is this a bona fide discovery? It's almost certainly going to be a copper mine someday, and it's almost certainly going to be bought out at a premium, of course. This is run by the Hunter Dixon Group, and Bob is not going to let this thing go cheap. So there's still going to be a premium when it's bought out. So, but if you want one that has not run up so much, you could look at where'd it go? I want to make sure I got it here. Gladiator Metals. Um, yeah, here, I'm in the wrong portfolio. This is a copper explorer in the Yukon that's having high grade results. They continue to hit both infill and step out drilling. It's still wide open, especially at depth. They're going to be doing a resource probably in Q1 of 2026. That resource may surprise the market. Now, if they still have drill results coming in, right? So as assays come in, they may decide, you know what, instead of doing a resource, we want to continue to drill it to see how big it is before we do the first resource. They'll probably do that first resource, the first part of next year, is my guess. I mean, they'll still continue to drill it, but either of those things could surprise the market. So that's one I really like. Again, you could read all about that one on our website for free. If you want a uranium one, there's several there I really like. There's a brand new pick that might just be the best chance for a discovery in the Athabasca. You'll have to read about that in the paid letter. But in the meantime, if you want another one, that would be a company called Homeland Uranium. This is a fairly new company again. They just bought an asset, uranium asset in Colorado. It has a historical resource of 35 million pounds. So they need to prove that up, and it'll probably get bigger than that. But they stand directly in the path of all the U.S. focus on uranium and critical metals and energy independence and all that. So they're going to find it, easier to permit, easier to sell, easier to develop, maybe even easier to get bought out. They're going to be more attractive because they're in the U.S. So that's one I really like. So there's some picks that you might want to look at. Homeland Uranium is in the paid letter, so you'd have to subscribe to read that. But we are tracking that, and that's one that we really like.
Yes, thanks for that, Jeff. A lot of value. I'm sure people are taking notes. I'll be taking notes when I'll be doing the editing of the video. So really, really good picks, Jeff. And I would like to pull some more wisdom from you, Jeff. So what are let's say maybe top three things that you look at when you're analyzing and deciding if you want to get involved with a junior mining company?
Well, I wrote a book to answer that very question. That's what you see there in the background, Paydirt. So it's on our website. You can get a downloadable PDF immediately or order it from Amazon. It's not expensive, but um, I got asked that question so much, I just decided to write a book. Um, so it took me about 2.5 years off and on to do it. There's 17 other people in it, so there's a lot of really, a wealth of information in that book, including, of course, the method I've used that's been successful. So, but you start with the three legs of the stool: the people, the property, and the politics. You want not just strong people that have a good resume. You want people that have been successful at doing what you are investing in now or thinking about investing in. For the project, it's got to be something that's like my grandma's chocolate chip cookies. It's got to be big and rich. You want to look for those things if you can get them, or the possibility of being big and rich. And then the politics, you want a jurisdiction that's pro mining, obviously. You can go into a riskier jurisdiction if you really like the project, but I would make that the focus of your investments if you're in the junior sector. We're already taking a lot of risk by investing in juniors. So I like to reduce that risk by focusing just on pro mining jurisdictions. And by gosh, Vlad, I'm full time. I do this full time, and I have a hard time keeping up with all the companies that are in Nevada and in Quebec and even in BC and some other pro mining jurisdictions. Why do I need to go to Zimbabwe or wherever to look at a project there? So that's how I view it. I like to reduce my risk. Now, I may miss some, but I'm okay with that because I've lowered my risk by focusing on pro mining jurisdictions. So that's a good place to start. You do those three things, and you'll be ahead of the curve very much.
Yes, and you definitely can't kiss all the frogs. So by focusing on a select,
All the frogs.
um,
We usually say all the girls, but you're saying all the frogs. Okay.
so Jeff, I like to ask this question for the younger audience. If we have an individual who's still at the beginning of his and hers well-building path, with so many options, with so many different sectors, what advice would you have for that person when they want to get involved, they want to learn, they want to invest, but maybe they still don't have the right mentors, experience. So what advice would you have for that person?
Oh, that's a great question. First of all, I would get involved in gold and the mining sector because even though they've run up a little bit, the ratio of them to the broad market indexes is still low. It's not at all-time lows, but it's still near the low. In other words, there's more value and more likelihood of gold and gold mining stocks moving up relative to the NASDAQ and AI and Bitcoin and all these other things, right? So it's a good time to get involved. The second thing is you want to educate yourself, whether you buy the book or do something else. Just get yourself educated. This is the time to do it. You can follow our newsletter for free. You don't have to buy anything from us. You can follow the newsletter for free because it's a regular daily newsletter, almost daily, that analyzes and recommends stocks that we personally own. So we follow all their news. That would be educational. You want to make sure that you get educated. And on our site, by the way, we've hired a young person. He's not even 30. His name's Ted Butler. You can look on the Teams page and get his bio and all that. He works on the silver side mostly with Peter Kraut, but you can learn from him and all the things that he's doing and why he's involved in the sector. In fact, he dropped out of his MBA program because they just were constantly pushing the 60/40 portfolio, which has failed, by the way, obviously, since COVID. It's failed. And there was no discussion of owning a hard asset like gold. And so he left to focus on gold and silver. And he's definitely benefiting from that decision. So you could learn a lot from him as well. You can write to him, reach out to any of us on the website. But the point is, get educated because, boy, this is the prime time to do so. I think you're going to be richly rewarded over the next few years. At least that's how I'm investing. I'm investing as if I am going to see reward. And so if you agree with us, you can follow along with us.
Great advice. Thank you so much for that, Jeff. And I will have all the links in the description, the book, the website. I myself have been following Jeff's work for many years. And I don't think I've ever told you, Jeff, when I do my stock analysis, I very often would form my own opinion, and then I would like to compare, oh, what does Jeff think about that? and things like that. And I see what
That's a great way to do it. Yeah, it's a great way to do it. Start forming your own opinion based on your own research and education, whatever, then compare it to some people that you like and respect. That's a great way to learn. So I'm honored that you do that, Vlad.
yes, it's a truly great service. So I highly recommend for you guys to check it out. And so, Jeff, these are all the questions I had. Thank you so much for your time. I really enjoyed the conversation, and I hope to have you back on the show.
Oh, definitely, Vlad. Well, this is going to go for a few years, so we'll have lots to talk about over that time frame. So thanks for having me.